They say panic is the truest mirror of human nature. In the market, it strips away illusions and exposes what traders really believe. Fear doesn't whisper, it screams. And in those screams, Jesse Livermore heard opportunity. When the crowd ran for the exits, he walked in, not because he was fearless, but because he understood something most traders never do. Panic is predictable. It follows patterns, just like greed. Every market crash tells the same story, only the actors change. The script stays the same. Fear builds, logic fades, and prices collapse faster than reason can react. But here's the question. Why do most traders lose everything when fear takes over, while a few like Livermore build fortunes from the same chaos? Comment your thoughts below. Do you believe panic can be mastered, or is it simply human nature? In this story, we step back into the early 1900s, a time when ticker tapes ruled Wall Street and Jesse Livermore was rewriting the rules of speculation. Before computers, before algorithms, before social media, there was instinct, tape reading, and psychology. Livermore wasn't just trading stocks, he was trading emotion. The panic of 1907 nearly broke Wall Street. Banks failed, investors collapsed under margin calls, and the air was thick with despair. Yet while thousands watched their wealth vanish, Livermore saw something entirely different. He saw confirmation. Every wave of panic was a signal that the herd was surrendering. And when the herd surrenders, the intelligent speculator prepares. This wasn't luck. Livermore had studied these patterns for years. He learned that the crowd always reacts, never anticipates. They buy when it feels safe, and sell when it feels unbearable. And that emotional cycle, repeated endlessly, became his edge. In those moments, Livermore's thinking separated him from everyone else. He wasn't watching the news or listening to the crowd. He was listening to price, volume, and behavior. He said, "The market is never wrong. Opinions often are." It's a brutal truth, but one every trader must face if they ever hope to survive. If you've ever felt your stomach tighten during a market dip, you've already lived part of this story. Panic feels personal. It makes you doubt your logic, your strategy, your timing. But Livermore knew that when others felt fear, that's when discipline mattered most. He turned panic into a signal, not a setback. As the panic of 1907 unfolded, he positioned himself against the tide. His trades were bold, calculated, and rooted in observation, not emotion. When the dust settled, he walked away with millions, not because he predicted the crash, but because he prepared for it. That's the real secret. In this episode, we'll dive into how Livermore dissected fear, how he saw through chaos, and how you can apply his mindset in today's volatile markets. This isn't history for nostalgia's sake. It's a manual for surviving panic psychologically and financially. Let's step into the moment where fear took control of the market, but one man kept his nerve. Let's explore how Jesse Livermore turned panic into profit. Every trader faces a silent war inside the mind. It's not between profit and loss, but between logic and emotion. That war becomes brutal when markets collapse. Prices fall, screens turn red, and even experienced traders feel the pull of panic. The paradox is simple. The moment you most need control is the exact moment your instincts betray you. In 1907, the markets were drowning in fear. Rumors spread faster than facts. Banks shut their doors. People lined the streets, demanding withdrawals. The financial system itself looked ready to crumble. Most traders saw disaster. Livermore saw human behavior laid bare. He once said, "When everyone is scared, that's when I start to look for opportunity." But saying it is one thing. Living it is another. Imagine watching your position swing violently, your capital evaporating by the hour. Every part of you wants to act, to fix something, to do anything. Yet Livermore did the opposite. He waited, he observed, he studied the market's pulse like a surgeon reading a heartbeat. The paradox of panic trading is that restraint feels like weakness, but it's strength disguised. Or comment your thoughts below. When markets fall apart, do you freeze or fight back? How do you handle that internal storm? This is the moment where most traders fail. They believe the market rewards intelligence, but Livermore believed it rewards discipline. Intelligence without control leads to ruin. He understood that every emotional reaction, fear, greed, doubt, leaves a footprint in price action. When the crowd dumped stocks, he watched volume spike. When they fled for safety, he saw exhaustion forming. It wasn't numbers on a tape. It was human psychology in motion. He called it the rhythm of the market. That rhythm doesn't stop during panic. It becomes clearer. The louder the emotion, the easier it is to read. Modern traders forget that. They get lost in data, algorithms, and headlines. But the core dynamic hasn't changed since 1907. The crowd still moves as one. Fear still amplifies mistakes. Confidence still fades in clusters. The inner conflict is always the same. You tell yourself to stay calm while your brain screams to escape. You promise to follow your plan, but the pain of loss feels unbearable. Livermore faced that too. He wasn't immune to emotion. He just learned to interpret it. To him, panic wasn't chaos. It was structure revealing itself through stress. That's what separates a speculator from a gambler. A gambler reacts to pressure. A speculator reads it. Livermore would often say, the big money is not in the buying or the selling, but in the waiting. Waiting through fear requires faith not in luck, but in preparation. You cannot wait calmly unless you've already accepted what panic will test in you. Every crash exposes more than portfolios. It exposes character. That's why Livermore's story still matters. The paradox of panic is that the crowd sees destruction while the few see renewal. One man's crash is another man's signal. As fear reached its peak in 1907, Livermore saw something most couldn't. He saw the signs of capitulation, the point where panic becomes exhaustion. That's where he prepared to act. His mind was quiet while others shouted. His plan was clear while others begged for rescue. The paradox was complete. The crowd's fear became his clarity. The most dangerous part of a market crash isn't the falling price, it's the falling confidence. When fear grips the market, it doesn't just destroy wealth, it rewires the mind. Traders stop thinking about opportunity. They start thinking about survival. That shift, from strategy to survival, is the psychological trap that ruins most careers. Livermore saw this over and over. Every crash exposed the same weakness. People couldn't stand uncertainty. They wanted control in a system that punishes control. So they acted too soon, too fast, too emotional. He once said, "The desire for constant action is responsible for most losses in Wall Street." That desire is the real enemy. When you watch prices crash, your brain triggers the same chemical reactions as physical danger. Adrenaline, cortisol, panic. It's biological. You're not thinking in probabilities. You're thinking in protection. That's why traders sell bottoms and buy tops. They're not trading the market. They're trading their own fear. Comment your thoughts below. Have you ever made a trade just to stop the pain? That's the trap Livermore warned about. In the panic of 1907, every trader felt it. The headlines screamed collapse. Banks failed. The New York Stock Exchange suspended trading to calm the panic. Men who had been confident a week earlier were now liquidating everything. They didn't care about price. They cared about escape. Livermore watched this unfold from his office, not with arrogance, but with recognition. He knew he was watching human nature implode in real time. The core problem was never the crash itself. It was the human reaction to it. Livermore realized that markets don't move on logic. They move on emotion multiplied by leverage. The crowd amplifies that emotion. One trader's fear becomes another's confirmation. Soon it's a chain reaction of anxiety. He studied those moments because they revealed where true value hides. He also knew that panic doesn't announce itself. It builds slowly, like pressure behind a dam. Then one rumor breaks the wall. In 1907, it was the Knickerbocker Trust collapse. When depositors couldn't withdraw their money, the fear spread across the entire financial system. Prices collapsed in days. But for Livermore, it was validation. He had been shorting the market for weeks, not because he predicted the event, but because he saw the tension building. He wasn't trading the news. He was trading behavior. The psychological trap for modern traders is identical. You see a red day and think, I have to act. You tell yourself it's logic, but it's emotion disguised as reason. You start watching every tick, every candle, every headline. You lose perspective. That's when panic owns you. Livermore trained himself to detach from that noise. He didn't try to predict when panic would end. He waited for the exhaustion that follows every emotional climax. He called it the point of least resistance. That point only appears when the crowd has given up. It's not visible on a chart. It's visible in behavior, the tone of headlines, the volume of selling, the absence of bids. Livermore recognized those cues instinctively. He learned to see what panic feels like, not just what it looks like. That sensitivity was his weapon. The trap for most traders is thinking they can outsmart fear. You can't. You can only manage your exposure to it. Livermore's method wasn't about eliminating risk. It was about controlling reaction. He used rules, structure, and timing to shield himself from emotion. Every position he took had purpose, not impulse. That's why he survived when others didn't. The market punishes impatience. Panic feeds on that. And in 1907, the trap claimed almost everyone on Wall Street except one man who understood that emotion, when measured correctly, could become data. The question is, how did Livermore build that mindset? What let him stay calm while the world fell apart? Livermore believed the market was a living reflection of human emotion. He didn't see it as numbers or charts, but as psychology in motion. Every rise, every crash, was a pulse of collective feeling. To him, trading wasn't about predicting the future. It was about interpreting behavior. That mindset made him one of the few men who could profit when everyone else was panicking. He understood that fear was both universal and measurable. It followed patterns. When people are overconfident, they buy without thinking. When they're terrified, they sell without reason. Livermore built his rules around those emotional extremes. His philosophy was simple but brutal. The market rewards patience and punishes emotion. He often said, "The human side of every person is the greatest enemy of the average investor." That wasn't arrogance. It was observation. He saw how traders, even smart ones, would sabotage themselves the moment stress appeared. They'd abandon logic for comfort. They'd chase safety instead of strategy. He refused to play that game. Comment your thoughts below. Do you think discipline can override fear, or does fear always win in the end? Livermore's core belief was that market crashes were not accidents. They were the natural result of emotional excess. The crowd always first in greed, then in fear. That cycle, he said, is as old as the market itself. So he learned to study the emotional temperature of the market. He didn't react to price. He reacted to the behavior driving price. When panic spread in 1907, Livermore recognized it as the final act of that emotional cycle. The same people who had been euphoric months before were now desperate. That desperation, he said, was confirmation that the downtrend was nearing exhaustion. The crowd had capitulated. That was his signal. But his strength wasn't just analysis. It was detachment. Livermore trained himself to think like an outsider. He viewed the market as a scientist views an experiment. Every crash was data. Every panic was evidence. He stripped emotion from decision-making through structure, position, sizing, risk limits, and timing rules. He knew that survival mattered more than prediction. His perspective was built on brutal lessons. He had lost fortunes before. Each loss taught him that emotion, not information, destroys traders. So he developed systems that removed the need for hope. When his setups failed, he exited. When they worked, he let them run. There was no drama, no attachment, no pride, just execution. That level of control wasn't natural. It was trained. He spent years observing how fear distorts logic. He watched how traders panic, not because of facts, but because of uncertainty. They couldn't stand not knowing. Livermore embraced that uncertainty. He saw it as the only constant in speculation. To him, crashes were not threats. They revealed who truly understood the game. Anyone could make money in a bull market, but only the disciplined could survive panic. His perspective transformed fear into information. Every emotional outburst by the crowd confirmed what he already believed, that most people cannot think independently under pressure. Modern traders still face the same test. Social media amplifies panic faster than any ticker tape ever did, but the principle hasn't changed. If you can stay calm while others lose control, you hold power. Livermore proved it. His profits during the panic weren't born from genius. They came from obedience to rules, to observation, to patience. He didn't try to predict the bottom. He waited for proof that fear had exhausted itself. He said, "Never argue with the tape." When the selling began to slow, when volume thinned, and when the tone shifted from panic to despair, that's when he knew the tide had turned. That perspective, cold, disciplined, unyielding, is what made him dangerous to the crowd. While they traded emotion, he traded structure. While they sought relief, he sought confirmation. And in the aftermath of the 1907 crash, that perspective turned fear into fortune. Picture Wall Street in October 1907. The air is tense. Brokers shout across the trading floor. The smell of sweat and cigarette smoke lingers. Panic has consumed the market. The Knickerbocker Trust has failed. Banks are collapsing one by one. People outside the exchange are begging for news, desperate to know if their savings still exist. Inside, Jesse Livermore sits quietly at his desk. He isn't shouting. He isn't panicking. He's watching the tape, line by line, tick by tick. Every price movement tells him a story. He sees fear accelerating. He sees selling pressure building. But most importantly, he sees confirmation. The crowd has lost control. Days earlier, Livermore had taken massive short positions across leading stocks. He wasn't gambling. He had been preparing for this moment for months. He watched as speculation reached unsustainable levels. The market was drunk on optimism. He waited until he saw the first cracks, weak rebounds, heavy volume on down days, and a shift in tone from excitement to uncertainty. Then he acted. As panic spread, his short positions surged in value. Every tick downward confirmed his analysis. But this wasn't a moment of celebration. He knew how fragile it all was. Livermore once said, "A man must believe in himself and his judgment if he expects to make a living at this game." Belief, not arrogance, guided him through the storm. Comment your thoughts below. Could you hold your position while the world around you collapses? The more the market fell, the more people begged for answers. Newspapers printed rumors that the entire system might fail. Banks stopped lending. Businesses closed overnight. Yet Livermore stayed still. He had already committed to his plan. Panic, to him, was a process, not an event. He knew that fear follows stages: disbelief, denial, surrender, and despair. Only when despair sets in does opportunity appear. He waited for that final stage. Then one afternoon, a message came through the ticker. JP Morgan had stepped in to stabilize the market. The panic had reached its peak. The selling slowed. The tape showed signs of exhaustion. Livermore recognized it instantly. The market was done falling. He began covering his shorts, locking in profits. His timing was precise. Within weeks, stocks started to recover. When the dust settled, Livermore had earned around $3 million a fortune in 1907, equivalent to tens of millions today. He didn't brag. He didn't rush into new trades. He simply observed the aftermath. He had seen panic turn into profit through patience, observation, and discipline. The press called him the boy plunger. But what few understood was that his real talent wasn't prediction, it was emotional control. While others let fear dictate their decisions, Livermore used fear as data. He once said, "It was never my thinking that made the big money for me. It was always my sitting." That single line defines the essence of trading psychology. Most traders lose not because they lack knowledge, but because they lack patience. They act out of emotion. Livermore acted out of structure. His calm during the 1907 crash became a blueprint for crisis trading. The same principles guided him again in 1929, when another market collapse made him even richer. The story of 1907 isn't about a man beating the market, it's about a man understanding it. He saw that panic as a mirror. It reflects who you are as a trader. Some see fear unfold, others see structure and weight. Livermore proved that survival and profit come from mastering yourself. Before you try to master the market, his discipline wasn't mechanical. It was psychological armor. He had built it through failure, loss, and reflection. That's why, when everyone else was fighting for air, he breathed calmly. The lesson is timeless. When panic hits, your reaction determines your outcome. Livermore's story is a reminder that the market doesn't destroy you. Your emotions do, but if you can control them, panic becomes profit. And as the world recovered from the 1907 crash, one truth remained clear to Livermore: the crowd would always repeat its mistakes. Every panic ends the same way: silence. The noise fades. The chaos cools. The crowd, exhausted and broken, looks back and asks how it all happened. That's when Livermore's lesson echoes the loudest. The market didn't destroy them. Their fear did. He once said, "The market does not beat them. They beat themselves." That single truth defines his entire philosophy. It wasn't about finding perfect trades. It was about mastering human nature, your own and everyone else's. After the panic of 1907, Livermore walked away with one of the largest fortunes of his career. Yet what made his story powerful wasn't the money. It was the mindset. He had learned to stay detached in moments that drive others mad. He treated panic as a teacher, not an enemy. He knew that in the market, emotion is both the poison and the cure. Comment your thoughts below. Do you think you could keep your discipline when everyone else loses theirs? Livermore's world was one of telegrams, paper charts, and ticker tapes. Today's traders have screens, data, and endless opinions. But the psychology hasn't changed. The crowd still panics. The headlines still exaggerate. The fear still spreads faster than reason. Technology has evolved, but human emotion hasn't. That's why his rules still work. He lived by principles that outlasted his era. Cut losses quickly. Let winners run. Don't argue with the market. Wait for confirmation. Protect your capital above all. These weren't theories. They were survival mechanisms. In panic, survival comes before profit. Livermore's greatest gift to modern traders isn't a system, it's perspective. He proved that chaos is predictable if you know how to read behavior. He taught that you don't need to be fearless. You need to be prepared. Fear will always exist. What matters is what you do with it. Think about that the next time markets crash. When the red candles stack and the fear spreads, remember that every panic eventually burns itself out. Somewhere in that noise lies opportunity, but only those who stay patient will see it. The market rewards the quiet observer, not the loud participant. Livermore's calm wasn't luck. It was built through loss, study, and repetition. He failed, learned, adapted, and came back stronger. Every panic was another test of discipline. Every recovery was proof that emotion fades and logic endures. In the end, his story isn't just about trading. It's about understanding people, the crowd, the fear, the cycle. To turn panic into profit, you must stop reacting and start observing. You must stop chasing certainty and start accepting uncertainty as the cost of opportunity. Livermore's life had triumphs and tragedies, but his insights remain timeless. They remind us that markets aren't ruled by math. They're ruled by emotion, and the trader who learns to read emotion has the only real edge that lasts thought. So when the next crash comes and it will ask yourself, will you follow the crowd, or will you listen to the tape? Will you panic, or will you prepare? That's the question Livermore left for all of us. And maybe, just maybe, the answer decides who survives the next storm. What would you have done in his place? Comment below and share your thoughts.